Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, let's just dive on in, and let's first start off with the fact that DCENT Wallets is holding a major event right now until November 16th. If you purchase a DCENT wallet, I'm going to drop a link down in the description below, as well as in the comments below. If you guys go and get a DCENT wallet right now, you can actually fill out a form on their website. It's at the top, where they are giving away 200 Algorand right now. And as you guys are all aware, if Algorand does make it back to $1 plus, the all-time high was nearly $3. That means that your 200 Algorand could very well be worth $200 to $400, which would cover the DCENT wallet fully and essentially give you a free cold storage wallet. So if you guys do want to take advantage of this massive offer from DCENT Wallet, you guys are more than welcome to, with the links down in the description below, as well as in the comments below. It's going to be at the top, just to make sure that you guys don't miss it. So if you guys do want to go get this, it's a limited time only. I highly suggest everybody go out and get a DCENT wallet right now, especially as we prepare for the next major run up in the market. Now, with that being said, let's dive on in and let's go over to the prices in the overall market. So total market cap of crypto sitting at about roughly almost 1.3 trillion. Not too much change market cap wise for the overall market, but we have been seeing some great coins waking up. If we actually go to the top 24-hour gainers, we are seeing some of our favorite picks moving. For example, the Graph and even Rose. These are two great picks in my opinion, but there has been some other great ones as well. Telcoin, another one. I'm personally just waiting until XRP can break over resistance. Honestly, if we continue to trade here against that resistance, it's going to make it much weaker for us to actually break out. One of the biggest things that I've been addressing on the all-time chart on XRP, which is very, very clear to see, is a flip of this like 63 to 65 cent zone. I'm waiting to see a big move here because once we do flip that, I do believe that $1 is going to happen very, very soon. So we are watching XRP very closely during this time, especially in this market. And also as we gear up for the end of the month with a lot of standardization going into place regarding this new financial system, essentially. Again, a lot of these are pieces of the puzzle that need to fall into place. They are not price drivers. Do not think about it as price drivers, but it is significant for the whole world of crypto, specifically those utility tokens out there, because it is going to really start the process of us getting to the point of a utility bull run. But I want to go over a few things. Back in April of this year, I put out a tweet regarding Fednow. Now remember, Fednow is not technically launched, right? But I said I strongly believe that the Fednow service is about to cause systemic damage to the banking system. Reason why, you ask? Simple. Banks are operating on a liquidity crunch at the moment. Combine this with the recent spike in withdrawals, and well, banks are being constricted. Rate hikes can definitely increase banks' earnings, but ultimately will still lead to systemic collapse. The problem currently is going back to one, banks are also still constricted on lending capital. This means lending is starting to slow and will most likely lead to banks hesitant to lend. Lastly, but not least, the Fednow service will allow for 24/7, 365 instant settlement. Now think about this logically. Our system is running on an antiquated infrastructure still. Combine this with the fact that liquidity is drying up and banks are practically insolvent, and it's a recipe for disaster. The traditional system was slow, yes, but it also bought time for banks when things started to go south. Now introduce an instant settlement 24/7, 365 payment system without proper liquidity, and boom, banks begin to go bust at an alarming rate. This is exactly why I say I believe the Fednow system is an attack purposely on the current financial system to cause mayhem to introduce CBDCs. It's the perfect excuse and reasoning behind it. I also would love to note that the FDIC bail-ins, meaning your money in a bank, whether it is $250,000 or less, will be utilized to save the wealthy and the banks. And we actually know this from the FDIC themselves. But beyond this, right, the Fednow service, yes, I do believe that this is going to cause damage. And recently, we know from a lot of the reports outside of Twitter and outside of crypto, major banking problems were just rising just the other day. Many using major US banks did not receive their deposits today. Now, this is from Jungle Inc. XRP. Now, a lot of people were saying like major problem or simple error. A lot of people were saying like, oh, this might just be like an ACH glitch or some, type of problem. But it did end up getting reported pretty much everywhere with a lot of people not being able to get paid. Over 900,000 payments on a big payday basically being delayed. And this is a big problem. Now, again, a lot of people were thinking that it was just the ACH network acting up or so, but either way, it doesn't matter, right? Like, one of the biggest things about the banking system is the fact that we rely on it too heavily, right? And it's also a system that's extremely antiquated. It's extremely inefficient. When we look at what's going on, I do believe that liquidity has been drying up for a while. A lot of people still think that liquidity is, improving with, the Fed, pausing rates and things like that. In my opinion, right, we are still gearing up for one of the largest transitions in the history of payments. We need to create some type of major problem in order to actually introduce this new system. It could be, whether it's BRICS, right, moving forward on a CBDC, or BRICS moving forward on anything, and us utilizing that as an example, that's fine. But I also think that we need the traditional system to start collapsing. And we actually already seen that this year, going all the way back to March and April, which is why I actually put out this tweet. We started to see banks collapsing. Today, is liquidity increasing? Is liquidity becoming a little bit more healthy? Technically, yes, it is. But we still have the issue of, 2008 could happen all over again very easily, because banks still did not learn their lesson. And in fact, that's what led a lot of these banks that recently collapsed this year to really collapse, is the fact that they didn't learn their lesson from 2008. But outside of all of this, a massive change is on the horizon this month, and it is with Fednow. Now, again, going back to that original viewpoint around liquidity, without proper liquidity, this system essentially is useless. But how could we have something where liquidity is tapped in on demand? I could, name a few things. XRP is a great example. But there's also other ones as well. But XRP is one of the most tried and tested solutions to proper liquidity management. But beyond that, as we actually look at Fednow, this could be the gateway to mass adoption, essentially, around DLT and crypto, if, of course, it is not being utilized as an accelerant for this new system. But we have over here from ISO 20022, let's do it, going all the way back to November 3rd. Just the other day, we see here, growth in DLT-based secondary market liquidity. Trading of DLT-based securities emerges in selected trading venues for selected asset classes, e.g. illiquids. DLT platforms are integrating with traditional non-DLT FMI, e.g. Fednow for payment settlement. Also over here, we do see interoperability. The Fednow settlement service is designed to work seamlessly with existing payment systems and financial institutions. We do see integrating a blockchain-based system might have presented significant challenges in terms of interoperability with other systems and could have complicated the adoption process for banks and financial institutions. This is not to say that blockchain and DLT systems will not work with Fednow in the future. Banks and fintech companies could build applications or services that use blockchain for specific use cases, such as cross-border payments, supply chain financing, or digital identity management, while still utilizing the instant settlement capabilities of Fednow. Now, of course, at the bottom there, we do see these collaborations could be established by developing APIs or integration layers that allow blockchain-based systems to interact with the Fednow service, which we actually know there's already APIs in place. RippleNet, for an example, is a great example of an API plug-and-play integration. Also, DropCC from Hedera, actually, they're building on Hedera. They have built their overall solution on Hedera. That is a micropayments platform, and they are actually tapped in with Fednow. But we do see Fednow have published the charges for using the system as well, which they did outline, but it is not given that it will be able to complete or compete with entrenched services with critical mass such as Visa. But also over here on the next slide, we're also introducing data improvements related to ISO 20022, a standardization procedure that will maintain our interoperability in the fintech, traditional finance, and crypto spaces. We're not considered a decentralized ledger technology on our own, as we don't have an internal ledger, but we partner with several DLTs, which makes ISO 20022 essential for our operations. Stronghold will also be preparing for Fednow when it tentatively launches in July. But then also over here, we see a DLT dimension. A key aspect of this kind of DLT or DLT, they're just talking about distributed ledger technology, without the obstacle of public access, will be to record instant transaction finality at a high volume process through federated architecture. While many projects claim to be able to handle such a high throughput, only a handful of tested technologies will be able to do so. And an even smaller group would fit the aims of the Fednow service. So a lot of these platforms would have to be really tested. We know that there's been a lot of connections back to the Federal Reserve with Ripple, for an example, and even Hedera. But it's definitely interesting to see them talking about DLT, talking about blockchain, ISO 20022, and all this, really kind of confirming the idea that this will be a significant piece of the puzzle. But we see Fednow November 2023 as well. The Fednow new service and FedWire Fund Service will be based on the ISO 20022, expecting to be fully transitioned by November of 2023. 87% of worldwide transactions will also be running over ISO 20022 within the next 5 years. But then also over here, for US FedWire and Fednow service, the deadline is the end of November of 2023. Also over here, some major payment infrastructures that are upgrading in November of 2023 include EBA Clearing, Federal Reserve, EPC, Euro System, and also the Bank of England's RTGS system. All of this is moving pretty quick, and we even do see starting this month, all banks and payment service providers will need to accept payment messages with structured addresses. So this is definitely interesting. And listen, even going back to my original viewpoint on Fednow, even if this isn't the accelerant to this new system, and maybe it doesn't even cause systemic damage to the banking sector, I still think that this is a major introduction to the new financial system, because again, we already see all the major players lined up and tapped in with Fednow. We also see a lot of the other connections to the Fednow service, like for example, the integrators. The integrators are the key ones, like DropCC, Volante, Finostra, because they all have exposure to, say for so like XRP with Ripple, or even HBAR with Hedera. So it's crucial to mention this. But also outside of this, we know banks right now are taking heavy losses. We know banks are pretty weak. They have been weak since like the middle of this year. For an example, check this out. Shout out to Assets Daily. So this is $40 billion in unrealized losses hits JP Morgan Chase as Bank of America, JP Morgan Chase and also Bank of America, Wells Fargo, and Citigroup faces exposure to US Treasuries. Yeah, so a lot of these major banks are already seeing major losses, but they are also seeing major delays. This is telling me that one, banks are either having a rough time right now. The networks that these banks run on, aka the ACH network, like these things need to change. Like we need to see major changes. We also need to see liquidity unlocked. And the best way to do this is by tapping into blockchain and DLT. And these losses, like banks are constricted right now. Banks are under an immense amount of pressure. With Fednow, it could be an accelerant or it could not, right? In my opinion, I believe it will be, because this is going to cause things to move a lot faster, and with a lack of liquidity, which, listen, our banking sector has never had sustainable liquidity for 24/7, 365 settlement, unless they are tapping in to blockchain and DLT. And from what we are seeing with this post by ISO 20022, let's do it over on Twitter, it seems as though DLT and blockchain, it's all being tapped in with ISO 20022, and it could be changing this entire month. Like this whole month is nothing but major updates regarding ISO 20022 with some very large players, like even Swift, for an example. So change is in the air. We already have quite a bit of accelerants out there to really kind of usher in this new system and be utilized as an example. Like I said, Bricks is a great one. We've been talking about how that could be utilized as an example to push this new system. But then also, you know, you have a lot of other conflict. You have inflation brewing. You have, you know, problems behind the scenes with the banking system. You have banks themselves collapsing. You have liquidity drying up. And again, you know, liquidity doesn't improve overnight. Yes, we are seeing some great changes to it, but for the most part, like liquidity is not going to, you know, just show up tomorrow, right? It takes time. But I do know that certain cryptocurrencies, aka XRP, right, could unlock a ton of trapped capital, which could be in the trillions of dollars. That's a huge gateway to a ton of untapped liquidity. So with that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Peace out.